Brazil, we're joined by Alexis Dawance. He's partner at Global Cap. He comes to us now from Zurich. Good morning to you, sir. So do you expect sugar prices to fall further?
Good morning. No, I think, although the sugar price fell almost 40% since the top, we're still not very bullish, I would say. We believe that the sugar price is approximately going to trade in a range, and we believe that the problem facing the market is that you've seen a lot of supply currently on the market given these recent very high prices. We believe also that substitutes of sugar are quite cheap today. If you look at high fructose corn syrup, it's trading at an average. If it's far away from the 2008 height. So this is an interesting point because it's a substitute in many soft drinks, especially in the US. And on the other hand, you also have the stevia plant who's coming, and we believe this could be a threat, especially in the developed world. Stevia is a plant that has been approved by the FDA for sales, who has 300 times the sweetness of sugar. And you've seen companies like Cargill and Coke investing a lot in their Truvia brand, while you have also Pepsi, who has developed a new brand called Pure Via, and both are only substitutes sugar coming from stevia plants. And so this is another point. Finally, you have also the oil price, who's also important, because you don't forget that ethanol is a substitute, or especially that in Brazil, when you're seeing the price of oil going up, you have a lot of sugarcane that's going into this market. So this is a third component.
You're talking about fundamental factors of supply and demand here, but we saw a huge run-up in sugar prices last year. Since January, they've dropped 40%. These are big distortions. How much of that is down to naked speculation?
Yeah, but don't forget that before it went down 40%, sugar price went up almost 60 or 70% in a couple of months. So you have to be careful there. And I think there is a lot of speculation in that market. And also, sugar has been a laggard during the last 3 years when you look at the whole commodity complex. So we believe that this 40% fall is not a buy signal for us. And you have to think on the long term. You have to view the sugar market on a 2-year basis.
Alexis?
I think it's very, very volatile. Yes.
What are you buying very quickly?
I think within commodity, we prefer to play equities to get who have kind of commodity exposure. Typically, we like the recycling sector. We like recycling companies who are having a lot of upside if the commodity price is going up, while limiting the downside. And we like the concept of green mines. On the other hand, we like also to play like the solar industry today. You've seen a huge collapse in many market caps there. We believe that the solar industry as a whole is quite cheap. When you compare the total market cap of the solar industry versus Exxon, for example, it has shrunk a lot.
Right.
And it's a good play to play the. It's a good way to play the oil market, for example,
Dawance,
with a limited downside as well.
We must leave it there. Thank you so much for sharing your insights with us.